What sets us apart is that we're not just looking at contract manufacturing. We're now trying to work with some of these projects. Nicky Clarke was the first, and there's a couple more on the horizon, where we will introduce them as special purpose vehicles into the whole, and we will run them as separate businesses for the customer. We will do the background, they'll do the foreground, but we're investing in the project.
Hello, you're watching Proactive. Joining me is Amirose London Director Mitchell Field. Mitchell, very good to speak with you. For viewers new to the story, tell us a little bit about Amirose London and what you do.
Amirose London has been around for about 15 years, but its involvement with the current contract manufacturing business is very relatively recent. It started in March 23, where it reversed itself into a manufacturing contract business based out in Thetford, up in Norfolk area. And my involvement was just after that, where I was invited to join the company to use my experience and my expertise in developing its contract manufacturing business of something that I've been involved with 40, 50 years.
Mitchell, you've recently listed on AQUIS, and that follows a reverse takeover by FileForge Technology. Tell us a little bit more about that and the rationale for going on to AQUIS.
The main contract manufacturing business is a particularly easy, simple model where we take in a brief from a customer, we develop that brief into a shelf-ready product, a whole service which involves formulation, product development, sampling, and in some cases, even assisting the customer in looking at their targets in the market itself for selling. But in its own right, that type of business model has been around a long time, did not need to go into a public offering. That wasn't what we did it for. What was more interesting is that in the process of inviting customers or customers asking us to develop products with them, there were situations where we felt they were fabulous opportunities. We should consider investing in them and taking equity in the companies and being more of a partner than just a supplier. And it was those areas, and I'll come to two or three of the areas we're now discussing. It was those areas that prompted the fact that the capital required for that was beyond the means of the company in its own right. We needed to go elsewhere. And that was the background to how we ended up looking at moving from just basically contract manufacturing and looking for a listing.
Mitchell, can you tell us more about the products that you do develop and who your customers are?
Right. Well, good start, I suppose, say what we do. As a contract manufacturer, we work in the personal care space. So we make for around about 150, 200 brands, about 60 customers. And the kind of brands that you would see in the hair care would be Philip Kingsley, Umberto Giannini, Trevor Sorbie type. Those products are on the high street shelves or in the professional wholesale and beauty markets. Recently, we signed up Nicky Clarke, who's another big one for us now. Then you've got skincare, you've got perfume, you've got like 12 categories in personal care. And the customer comes to us for a full service, meaning, as I said before, they'll ask us to think of something that will basically express the ideas going through their head for the gap in the market. We don't have to identify that gap. They do. What we do is fulfill it. So we'll come up with a formulation that works, and we'll get them to sample it, and then we do everything up until the point the customer wants it in the market.
You're obviously not the only contract manufacturer in the personal care market, Mitchell. What sets Amirose apart?
Well, we're certainly not, but there's only a small number in our particular area. Now, our area is from the 20 to 50 million pound turnover. We're below 20, but only a little bit. So the basic area that we're in is looking at a facility that has enormous capacity in it. When the company was taken over in 23, we ended up rationalizing what was already there. It was a 20+ million business at that time, but a lot of it was unprofitable. We cut it all out. We rationalized the equipment and we invested heavily in flow and efficiency. So that current facility is only using about 18% of its total capacity. And that gives us enormous scope to take on larger contracts or alternative contracts. We don't fit it in. We could go for some of the very big ones now to use up really a very significant facility, which could probably take 50 or 60 million quite easily into its turnover base. What sets us apart is that we're not just looking at contract manufacturing. We're now trying to work with some of these projects. Nicky Clarke was the first, and there's a couple more on the horizon, where we will introduce them as special purpose vehicles into the whole, and we will run them as separate businesses for the customer. We will do the background, they'll do the foreground, but we're investing in the project. That makes us different.
How's the business performing at the moment, Mitchell?
Its core business is clean, it's profitable. We are hitting 10 to 15% every month above break even. And, it's been consistently rising. We should hit 14 million plus. In fact, we should exceed it by a margin for this coming 25-26 year. And again, we should see growth without the special projects. This is just its core business. Core business is profitable.
So tell us about some of the news flow and milestones that your investors should be looking out for, Mitchell.
Okay, well, there's two or three trajectories for the business. The core business, which is identifying potential customers for its contract manufacturing, we've done that. That business has been doing that for 25 years. There's nothing new. The products you see are on the supermarket shelves or or brand owners. Export potential is high. That market is going to have some news flow as we identify new customers that are coming in. We've got, for example, 2 or 3 at the moment, which are entering the facility, which have decided to move their production out of China into the UK because of American tariffs. We've got 2 significant ones we're negotiating who want to come out of Israel because of the adverse economic news, and move into a European or American facility. Choice between us, we're tendering for it, because of the geopolitical situation. So we're looking at opportunities that would bring into the news flow. The other areas of news flow are going to be, we have an innovations department where we develop specific technologies for certain sectors of the personal care, in particular hair care at the moment, where curls, growth, straightening, and all these areas really need not just the name on the product. This is a growth product. It needs efficacy in clinical trials, and we're specializing in clinical trial products. That would give us news flow. The other areas of news flow are also in licensing, where we are going to form a special purpose vehicle, without giving you the name, of a very well-known celebrity in the pop field, to create their own fragrance. And we are being supported in that with companies like Sephora and others who want this particular branding. And there is a negotiation going on at the moment. And the question is then raising the sufficient monies to buy the license and fund the project. And that's what we really said, this is why we need to go public, because this is where the money will be.
Well, Mitchell, I hope you'll keep us updated on developments, particularly with that pop name once it's made public. Thank you very much for the introduction today.
My pleasure. Thank you. Bye-bye, Steve.
Amirose London Director, Mitchell Field.